2010 represented a year of stabilization for the industrial real estate market in northern Nevada. As we predicted last January at this forecast, during the year we experienced a consistent and slight decrease in vacancy in every quarter, a small amount of net positive absorption for the year, with a reasonable amount of leasing activity and some sales transactions. In comparison to 2009, we believe that our market has reached a relative floor from which we can gradually gain strength. This slide illustrates that steady decline we saw in our vacancy rate. We're certainly hopeful this trend continues through 2011, and it's great to see it drop below 15% in Q4 of last year. From a net absorption perspective, we are happy to see that we ended the year with positive demand. While 2010 only posted 282,000 square feet of total positive absorption, this was again refreshing relative to the negative absorption in 2009. This was due in part to a smaller number of large industrial closures, a reasonable amount of growth shown by existing industrial tenants in our market, and some new industrial tenants. As you can see, we saw an uptick in the number of new and expanding industrial tenants to our market. These transactions are those over 20,000 square feet. There are many more below that threshold. Colliers Industrial Services is fortunate to have been involved in several of these transactions, and those are highlighted in the slide. Industrial lease rates seem to have settled in all product categories at least 30% below the peak of the market in the 2006 timeframe. While this is dismal news for most landlords, we feel like a floor has been set in market lease rates. It should be noted, though, that there's a lot of market inventory in all industrial property types, including flex, mid-range, and bulk warehouse properties, a staggering figure. The one product category that has seen a significant reduction in availability is the bulk warehouse category. While it was only 2 to 3 years ago that we had over 3 million square feet of newly constructed buildings in the 400 to 600,000 square foot range, this market segment has seen some significant lease transactions, reducing the amount of this big box space available. Currently, the largest Class A bulk warehouse space available is the West America Commerce Center at 632,000 square feet in the Tahoe Reno Industrial Center. There's been a flurry of new big box space interest in recent months, and we have 3 great deals out there in the market. 2 national retailers and a large third-party logistics firm are all in Western Nevada looking for this big box space category. Prospects like these mean significant new jobs, and that's exactly what we need. Leasing incentives to entice new tenants have become a sign of the times. These can be in the form of free base rent, early occupancy, tenant improvements, and flexible expansion options in the form of rights of first offer and refusal, and must-take expansion plans. My construction friends don't like this slide, but given the current market conditions, there was no speculative construction in 2010. New building was limited to just a couple of build-to-suit projects. In this environment, new construction costs are at historically low levels, and this lack of construction volume has definitely hurt the local economy, as we've heard from previous presenters. But from a market perspective, this has a positive side, as it allows time for our existing inventory to get leased or sold. When lease rates and sale values recover, developers can once again consider spec construction. Listing and sale prices for industrial land have seen reductions in the 40 to 50% range by motivated sellers. Industrial zone land is now readily available for purchase in the Stead North Valleys area, listed for $2 to $3 per square foot. In the South Meadows and airport submarkets, in the $6 to $8 per square foot range. And land in the Tahoe Reno Industrial Center remains in abundant supply and is being offered with aggressive pricing for both the park developer and other private sellers. Last year I talked about our fundamental advantage as a regional distribution point
and Reno remains a good fit as companies evaluate their supply chain strategy. As the economy and specifically consumer spending begin to rebound, we'll see more new companies coming into the market. We saw that begin in 2010, and again, the activity continues to be brisk, to say the least. Just ask our friends here tonight from EDON. They'll tell you site visits and inquiries are ramping up. And I know we at Colliers are seeing that, so let's hope this trend continues. 2010 represented a time of resetting expectations for industrial landlords and sellers. The majority of lease and sales transactions that are occurring today have one common characteristic. They usually have a very happy tenant or buyer involved. Yes, it's a tenant's market. Those with good credit can get into a new lease for space that's larger in size, lower in cost, more functional, and more strategic in location. Ultimately, relocating and expanding tenants that we are seeing out there are trading up for less money. There have been limited investment transactions. We have seen equity infusion into industrial real estate to help landlords bridge the gap to a better market. Examples are the Blackstone investment of last October in Prologis, the recent CalSTRS JV with Panattoni Development, and now the merger of AMB and Prologis.
With an increase of available vacant mid-sized buildings for sale, one emerging opportunity remains with businesses seeking to purchase facilities for their own use. In the fourth quarter of last year, we certainly saw an uptick in activity for these mid-range market purchasers for owner-user buyers. Continue to be positive, but in small increments. Construction activity will remain limited to specific build-to-suit projects. Rents will be flat, but maybe increase slightly through the year. Thanks for your attention. You've been so patient. Big build-to-suit projects. Rents will be flat, but maybe increase slightly through the year. Thanks for your attention. You've been so patient. I look forward to increased activity in 2011, and I'd like to work with many of you. Thank you very much.